Good afternoon, Your Excellencies, ladies and gentlemen. Welcome to the next session of Fintech Forward. My name is Robert Willock with the Economist Intelligence Unit, and it's my honour to be with you for the next hour and a half or so, take you through a couple of important panel discussions. And the first of those is coming up right now, and that is on the topic green and inclusive, building a sustainable fintech ecosystem. Now, the fintech sector is potentially a very powerful force for environmental impact and financial inclusion. And this session will explore the evolving landscape of performance reporting and how fintech firms can enhance transparency and accountability. Has the fintech sector delivered on its promise to democratise finance and advance inclusion? What metrics best assess its environmental and social impact? And how can Gulf countries in particular position themselves as leaders in sustainable and inclusive fintech innovation, drawing on global standards and regional financial traditions? Those will be some of the questions we will be exploring with an excellent and expert panel. So please let me welcome to the stage my panelists. I'll start with Gerrit Sinderman, who is Executive Director of the Green Digital Finance Alliance. If I could ask you to take seat number 2. Gerrit, the Green Digital Finance Alliance, a catalyst of next generation green digital finance, not just a think tank, but I think you say a think do tank. Welcome, Gerrit. Please also next let me welcome to the stage Cynthia Wandia, co-founder and chief executive of Quora. Welcome, Cynthia. If I could ask you to take seat number 3. Quora, a company that facilitates democratized credit union banking. Also with us today, I'm delighted to welcome Mathias Wikström, chief executive of Doconomy, an impact tech company driving climate action to future-proof the planet. And last but not least, please let me welcome to the stage Doreen Shahnaz, Chief Executive and founder of the Impact Investment Exchange, empowering women, the environment, and the underserved. Ladies and gentlemen, please welcome to the stage your panelists. Thank you all. Thank you for joining us. So for the next half an hour or so, we'll be exploring questions around green and inclusive fintech. And I suppose we'll start with a larger, broader question, which is that the promise of fintech has always been twofold: that it would democratize finance and drive positive impact. We're nearly a decade into that journey, depending on where we define the starting point. So let's begin by asking how well we think the sector is living up to that vision to democratize finance and drive positive impact. And as tradition dictates, I'm going to go from right to left here, starting with you, Gerrit. So that first question, how has the fintech sector delivered on those promises?
I mean, in terms of sheer volume, I mean, I think it's obvious that fintech and fintech supported solutions have spread globally. The more important question is probably like, has it reached the right people and also with the right impact? And I think that was something that we discussed earlier, that there's of course like maybe to be distinguished between the pure technical financial inclusion and the what it actually leads to. But I think there's probably here some panelists that are better positioned to answer that. I mean, us being especially in Europe, I think the financial inclusion is probably defined a little bit different and somewhat, I would say, not urgent, but to a smaller degree.
Okay, thank you. Well, Cynthia, let's come on to you and ask that question again, and we can add to that a more provocative addendum, which is the fintech sector mostly serving the already connected and banked, or actually is there a meaningful opportunity for it to deliver to the underserved?
Yeah, thanks. Speaking from Quora's experience, where we digitize existing traditional community savings groups, fintech has absolutely delivered on bringing more people into the formal financial sector. So for the most part, of the over 200,000 clients we served, quite a few of them have no previous bank account. It's the first time that they build up a financial profile, and the first time they start accessing credit that is scored based on their actual savings behavior. So it has absolutely delivered, but with a caveat where fintech may have an inclination to always run to the cutting edge of technology. However, some of the existing infrastructure has actually proven to be much more useful and innovative than some of the more modern things. So anything to do with using the infrastructure people already have, whether it's a feature phone, whether it is SMS, has still brought quite a lot of value in terms of bringing people to be more served. What I'm saying is the tendency to focus on the best of technology, for example, smartphones, is what could leave quite a lot of people behind. However, if a fintech is a bit more mindful and pays attention to what people are already using, what is existing behavior, then the opportunity for fintech to continue delivering value is absolutely there, and there's proof.
Thank you. Is there therefore a risk that we're applying very Western developed economy mindsets to the opportunities, and therefore we're missing the bigger picture that could actually provide significant benefits for those underserved?
Absolutely. And speaking also from our experience, where as a tech company, you want to innovate, you want to launch the best features, you want to be really at the bleeding edge. And it was quite humbling for us to actually realize from the data that some of the biggest impact was emerging from quite baseline technology. As I said, SMS banking, USSD, and mobile money wallets, which are now more than 30 years old. That has still remained one of the biggest levers for impact. So when we look at success, we may struggle if we equate success in emerging markets to what success looks like in developed economies.
Thank you, Cynthia. Mathias, on to you. And obviously, wearing your Doconomy hat, it'd be also useful for us to bring in the perspectives of climate action, which of course also we know disproportionately affect people in developing economies. How successful do you think that fintech has been so far in respect of those promises of democratizing finance and driving positive impact?
Thank you, Robert, for a very important question to us at Doconomy, and I would like to build on what Cynthia and Gerrit was addressing earlier. I think from what we see, so we have financial inclusion being accelerated over the last, 20 years or so, looking at an increase from 51 to 80% if we're using the World Bank figures, right? We also see an increase in accessibility out of a SME perspective, and also from emerging markets where people have a readily safe access to financial services of relevance. Now, that is all good, but out of an impact perspective and looking at financial inclusion as a vehicle to educate around environmental impact, to educate and connect it to your individual behavior, I think we also need to see a fair ambition in increased financial literacy. If we use financial inclusion as a vehicle to educate the many around cause and effect connected to your lifestyle choices, we need to have not only accessible services, we also need to have reliable impact data. At Doconomy, we've been working for the last, 8 or 9 years. I feel so old every time I say how long I've been working with this. But we've been working almost for 10 years, educating retail banking clients using our impact data. And I think to build on what Her Excellency, the Minister of Sustainable Development, said on this stage recently, it comes down to innovation. It comes down to proximity, and it comes down to the ability to move fast. I think that corresponds with the characteristics of the Bahrain market and the Bahrain ambition, but it can also be applied to financial literacy as such. We need to be equally as fast, equally as close, and equally as ambitious in regards to financial literacy, providing climate literacy off the back of successful financial inclusion.
Thank you, Mathias. And that brings me nicely on to Doreen. I think that topic of financial literacy coupled with access is going to be hugely important for developing markets. I'm sure you've got some really interesting examples of how fintech has changed the lives quite positively of people who have previously been significantly underserved.
Thank you, Robert, and thank you, the Bahrain government and the economists for having us here. I actually will say fintech absolutely created scale, but I disagree if it actually transformed people's lives. That's questionable. And the reason it's questionable is because we are looking everything from the lens of financial technology instead of flipping it and saying, is technology coming into health, education, into financial services, into all the sectors that actually go to the last mile? And is that actually changing people's lives? So at IIX, the company that I run, we have invested over $600 million across Asia, Pacific, and Africa to the companies who are using technology. Some of them are using for finance. But the key here is they have to have measurable impact that is transforming the lives of the people in the last mile. And this is time, and I say to all of you in the audience, we have to stop thinking in the lens from the Western point of view and VC point of view. We need to be thinking in terms of, are we including the people who matter? They're not just consumers, they're actually producers. So we need to be having them in the equation, seeing the impact they're creating and creating a value in the financial market because of what they're producing.
Thank you, Doreen. Yeah, all of my panelists have shown me a finger here, suggesting that they want to come in on that.
I wanted to start it up. I think everyone was behaving too well. So
I think
there you go.
Nicely introduced the distinction between fintech and techfin, which I think others also wanted to talk about. Gerrit, what did you want to add to Doreen's point?
Just maybe also two quick responses. So one, I think Doreen mentioned rightly that the actual impact where it matters, or like where people's lives are affected, is not happening only on their bank account. And I think there's also, you see already some examples of like bigger fintechs. I mean, like the super apps in China, for example. I mean, Ant has been also recently launching, for example, their health companion, travel companion. I mean, travel, of course, not affecting everyone. But I think you definitely see that there's like a beyond banking movement also on that end. And the other part, I mean, here we have been speaking, of course, more of the impact and how it reaches the end beneficiary, but more from an individual level. But there's, of course, also a wide space of like whether it's corporate banking, whether there's infrastructure investments, and also there you have a green fintech that is enabling, whether it's like helping on the impact measurement. I mean, there's regulatory rails in most markets meanwhile, and technology is also helping to guide the capital in those directions. And I think on a systemic macro level, you see the direction also happening, and also even an understanding not only from an individual level, let's say where it harms, but I mean whether it's banks, insurances, everyone sees it on their balance sheet, on their losses. So meaning there's also something where tech helps actually the sense making, and I would say both ends align and are complementing each other.
Thank you very much, Gerrit. Cynthia, you'd also raised a finger to suggest you had a follow-up point to Doreen's suggestion.
Absolutely, and really here to share some lived experience on this enlightenment that came for ourselves as well, where we started off by purely looking at things from a VC perspective, purely commercial, looking to grow fast. That's what every startup wants. That's what their investors want. This is the way that you're looking to create impact. And we've since come to a bit of a pivot as we transitioned from sort of direct to consumer or direct to business to having a one-to-one partnership with large donor institutions. And this pivot has meant that we've had to sort of look at impact as critically as we were looking at some of the other growth metrics we had. And the interesting thing is that maximizing on those impact metrics is actually generating more commercial outcomes faster than when we were purely looking at things from a commercial point of view. And I think especially as we look to more developed ecosystems, Silicon Valley, some parts of Europe, it's tempting to look at the North Star metrics that they follow as a way to, and in fact, your investors might even speak to that.
Is that a different set of metrics then that we should be paying attention to?
Absolutely. I mean, it's a combination of a different set of metrics or different translation of the same metrics. When we talk about retention, the holy grail, you want your customers to keep coming back. But what are they coming back to do? Are you measuring, do you have a measure for something that is actually improving their lives? For example, with credit, access to credit is one thing, but is it access to more meaningful products with faster or better repayments? Are their credit scores and credit profiles growing? And are more women borrowing? Are more value chains being funded? Using those as your North Star metrics still generates commercial returns, but converges in terms of a positive virtuous cycle than one which can be purely commercially very successful and then results in sort of cosmetic impact reporting every quarter when your VCs ask for some metrics. And that is a lived experience that we had.
Thank you, Cynthia. Doreen, I saw you raise your finger, but Mathias was first, so let me be democratic myself. Mathias, what did you want to add?
I just want to hear more from Doreen. So.
You can go ahead. It's okay. I'll add to yours.
Okay, so I love the notion, putting the user first instead of putting finance first. FinTech should be tech fin, and tech should be user-centric and user value creating. So I completely agree to that testament, and I really appreciate you for raising the point. In regards to the impact data, I think it's instrumental that people know what the consequences are from what they do, so that we can incentivize them to drive a change of behavior or to make more mindful decisions. May it be credit or may it be environmental impact. Those metrics are readily available. At Doconomy today, we're in conversation with a few nations on scoring every transaction out of a carbon perspective in order to educate all of their citizens around impact. Now, obviously, it would be very interesting to have a conversation with representatives of the government of Bahrain to have that injected into the financial system here as well in the name of leading innovation. At the end of the day, I think it comes down to risk, it comes down to reward, and it comes down to reputation. We have to break this green bubble of thought and implement this where it matters. It needs to be both in the hands of the consumer as well as the spreadsheets of the commercial entities. And with that said, I think we are very well on track in regards to breaking the echo of our own voices, which I believe is the second point that you very successfully raised. We cannot look at this out of a European lens, out of a North American lens, out of an APAC lens, out of an African lens, out of a Middle Eastern lens. We need to look at this out of a holistic perspective. And that is what I think tech for finance can do much better than finance for tech.
Thank you very much, Mathias. So, Doreen, what did you want to add?
Right. So I think I just wanted to emphasize what Cynthia was saying, and those were very succinct points in terms of really measuring the impact. And for us, it's not an aspiration. We actually are doing it. And what it does, let's just be very practical. Okay, let's talk about money, because that's what it boils down to. What we have seen is when we measure the impact and bake it into our financial products, we actually see the risk going down. of the financial instruments. So we have these bonds that we put in the market, women's livelihood bond. We also created a whole new asset class called orange bonds, because we have shown that if you measure the impact of the last mile, bring women into the equation and make women actually the champions for climate action, what happens is brings down the financial risk. So you as an investor, and we have all these sovereign funds who invest in our bonds, they are happily doing it because through their money, the impact is being created in the last mile, and we're using technology to be able to measure it and to be able to disperse it. So again, technology for good, technology that is using finance,
Yes,
and measuring impact.
you used the word consumer earlier, and I suppose one negative of that is that we might end up seeing fintech encourage consumption, and by encouraging consumption, we might be encouraging debt. Is there a risk that providing this new form of access also locks people in to new forms of debt?
We do see that, but then we have to, again, make the companies be responsible. So when we do the financing, we actually measure the impact that companies are creating. So if they are actually increasing consumption and creating the debt cycle, we actually measure that as well. We take the money away. So there has to be penalty, again, with the companies. If they're not creating the impact they should be creating, and if they're creating negative impact, the market needs to penalize them, and which we do. So again, there are only few of us, and again, that's the request to the audience. If you're in the financial markets, you should be looking at doing work like this, where again, impact is a part of the equation.
Fantastic. I'm just going to jump over you a second, Mathias. I will come back to you. But Cynthia, you wanted to add something to that?
Yeah, just to build on this, because on two fronts. The first is, as having worked with the underbanked, so people who have been previously saving in a complete isolated way, putting cash under the mattress, and bringing them into a fully digital platform. There are so many benefits of this, as you can imagine. They become credit worthy, they can access more opportunities, but they also become discoverable for other people who want to offer products that might not exactly fit them. And we've found that there's a huge responsibility on our end to make sure that they are being educated as they become part of this digital economy.
So they're suddenly on the radar, but that also means that they're potentially vulnerable to marketing, targeted practices to encourage more and more.
Exactly. Without the information of what does it mean to take a loan for consumption versus production. And to the second point, just again about Western lenses versus local lenses, there has been historical infrastructure in communities how to handle money. And I think the risk with technology and innovation, it always runs to what is new and shiny and skips over what are the local ways that communities actually have to manage their money. In Kenya, they're called SACCOs. I believe in the MENA, it's Kemeas. Like there is known behavior, known risk management, and there's an opportunity for technology to come and enhance existing positive behavior rather than introduce something. So for example, the SACCOs encourage us sort of save first, buy after, right? You have to save up for your money and then you can buy what you want to buy, which is the opposite of a buy now, pay later, which is sort of taken off in the West. And so the risk of innovation being, let's look at what's shiny and let's copy it, we posit that if you look at what is successful behavior in communities, knowledge that has been passed down, and then enhance that with technology and hold yourself as a company accountable. You can't just say, I made everyone credit worthy, not my responsibility that they're getting loans. This is not right. I think this is where there's an opportunity to contribute to making a better world.
Thank you. Gerrit's got his hand up, but I did jump over you earlier, Mathias. So come back to you.
I'd just like to build on what Cynthia was saying, that transparency in education is going to be instrumental for a sound and thriving ecosystem out of a finance perspective in any market. So at the end of the day, you need to step up to your own responsibilities. May that be as a consumer. If you want to reduce people to consumers, fine. I believe in them more as a citizen component. But I think transparency in education, driving financial literacy, as I alluded to earlier, is equally as important to combat the negative side effects. I would like to bring one other point to that mix, and that is that you can also drive positive change, coming back to one of your colleagues earlier in the day, Gupta, saying tokenization is the future of financial technology. If we resort to financial technology for a second, we can also tokenize, coming back to orange bonds, with a gender lens, or green bonds with an environmental lens. We can tokenize them and educate people on how to bring positive change around, instead of just absorbing the negative credit risk from buy now, pay later.
But what's the balance of carrot and stick to achieve that? Does this need a very tight regulatory environment, or can we leave it to the markets?
I guess that's the ever ongoing dialogue, right? And I think that some markets that are more liberal in their approach will have a competitive advantage in regards to shaping new norms and new paradigms around that. I just think it's important to bring to the conversation that we are looking at risk, but we do also need to look at the reward, because with only risk, no one will be stepping into it. And I do believe, to your experience as well, that if we can showcase through academic collaboration and research the component of reduced risk in context of a sustainability interest, I think that the financial services will follow, because where responsibility goes, funds usually flows. So I think that's a future that would be in benefit of all.
Thank you. Gerrit, you've been very patient, and I'll come back to you, Doreen.
No. I mean, I think it was also even like now covering both Cynthia and Mathias' comments, but more, I think listening to the conversation, it's also humbly reminding that, I mean, while capital has been already like power, I mean, technology is even an amplifier to some extent, and it scales both the good and the bad significantly more. So meaning, under the topic of responsibility, I mean, tech needs to not only be applied to what's possible and how can I grow faster, whether it's the financing portfolio or whatever, but also to do some sense making of like tracking exactly like the long-term impact. And I think that will also help like to form more sustainable client relationships if a financial institution needs to look at it from that perspective.
Very good, thank you. Doreen.
I just want to touch on the point you brought up in terms of, is it the market or is it actually the regulators? I do think that you need three groups coming together: the public sector, private sector, and the civil society. And it is important because it is about financial justice, social justice, and climate justice all coming together. One thing I do want to say, again, we are in Bahrain, a country of innovation, and what really I'm very happy about to see is what an important role gender equality is here. And also, as a Muslim woman myself, I think it's very important for us to be able to bring in innovation of Islamic finance into all of this. And as we are seeing in Indonesia, we are now doing $5 billion worth of orange bonds. In Bangladesh, another Muslim country, we're doing $2 billion worth of orange bonds, in both places also sukuks. And it is important, it's very important for us to think about not just fintech, techfin, but actually the structuring. Is it actually fair to ask people to pay an interest on a loan? Or do we actually think in an innovative way and be doing sharing of the assets, of the revenue? And all of these are the essence of inclusion. So this is my sort of, big request for all of us to be open-minded and actually be thinking with things which are not, again, just coming from the West or the global North, as we like to say.
Thank you, Doreen. Look, our clock is ticking down to 2 minutes. That's all we've got left. The time has zoomed by, as I promised it would. Let's just finish, if I can, by going across the line and asking you to be a bit future-gazing. and also to try and root your thoughts in the opportunities for our region here. What lessons from global best practice, things you've seen in green and inclusive finance, could be applied here in the Middle East? And what unique approaches do you think that our region here could pioneer, either for its own benefit or to support the underserved in the wider world? Let's just go across that. If I could ask you to keep it succinct,
Yes.
solve the world in 30 seconds for me.
I mean, I'm definitely not an expert here for the region, but I feel that in general, like with the rise of AI and data, there's a chance like to much more localize and individualize financial services. And then, of course, also to factor in much more complexity, and complexity being also not exactly only the financial risk, but also the impact side. And I think that's what I'm very sure that in the near future will happen much more.
Thank you very much, Gerrit. Cynthia, any thoughts on how our host country here and its neighbours could really take advantage of the opportunities that we've been discussing today?
Yeah, I would say kind of lessons also from Kenya, pioneering mobile money, looking at the solutions you have, looking at the specific needs of the community, and finding the innovation that is somewhat inherent is one way to really leap ahead. So whether it's Islamic financing, whether it is unique ways of community financing, that as a baseline innovation layered with technology is the way forward. So there's no need to copy, I would say. There's plenty of opportunity and innovation here.
Super. Thank you, Cynthia. Mathias, a short and succinct response, please.
I think that a smaller or more close, innovative and agile market has a very good opportunity to be the forward-looking and future-proofing component, both for the region and on a global level, to become the hub where responsibility meets profitability. And that can only happen at full capacity, of course.
Thank you. Doreen, final word goes to you.
The final word is the future lies with orange. So for us, if we want any of this to happen, you have to have inclusion and climate action going hand in hand, and we would have a much better discussion next time.
Wonderful. Thank you for that very positive final word. I'll be back for our next panel shortly, looking at infrastructure and innovation, and particularly actually how that might apply to our region. So that will lead us very nicely into that. But for now, please, can I ask our audience to join me in thanking our panelists. Thank you to Gerrit, thank you to Cynthia, to Mathias, and to Doreen. Ladies and gentlemen, thank you very much.